Hey traders, John Howell here, and we have, or I have a pretty awesome. What happened to my charting software? Here we go. Let's bring it back up. I have a awesome little bit of training for you guys today. Ooh, where'd that go? All right, cool. All right, let me bring up the laptop. This one here again. Cool. There. All right. So guys, I have a awesome training for you today. I'm going to be covering market update, right? So as you know, excuse me, as you know, for the last, say, week, I've been like, no, I don't know. Look, market's looking a bit top heavy. And I could sense that. That's the reason why I've been doing a lot of bearish videos lately, right? Now that's obviously right now. That doesn't mean for the rest of the year we're going to go down every day. No, don't get your knickers in a knot, all right? But that's just what's happening right now. What we're seeing right now, we're seeing a lot of selling move, and we're seeing a lot of selling power come into this. So I'm actually expecting more downside to come, but I'll talk about why I see that. I'll be looking at silver and gold as well too. What's going on with the silver and gold? Alrighty. And also we're going to look at the minor stocks, GDX. Actually, we're not going to be looking at Zoom. Let me do let me take this one off. I'm just gonna go ... Professional editing right now. We'll just leave that there. All right. I'm gonna look at two stocks that I like in this video today, guys. I'm gonna be looking at the death of the US dollar and why there's an incredible chart that I want to show you guys that just like wow, and why the US dollar, the death of the US dollar. The death of the fiat market, the way that we have seen things for many decades is coming to an end, and why a chart that I want to show you that absolutely just blew me away, and why we're this decade moving forward is going to be something new. Something new is going to happen. I'll be looking at some more stuff, and also be looking at oil as well too. So we've got a lot of stuff I want to cover with you today, guys. So let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty, traders. So let's get straight into today's markets. Wow. All right. Warning, guys. Warning, warning, warning. More downside to come, guys. What can I title this video to grab your attention? Warning, warning, warning. It's starting. There you go. That's what I'm going to title. Hey, at least I'm honest with it, right? At least I'm honest with you, with grabbing your attention. But it's the truth, though, right? Is because like right now, look what we're seeing here right now. Okay, if I zoom in right here, right now, look what's happening here. We are failing, right? Some market is changing trend. Market is changing tune, and we need to listen to it right now. What's happening right here? Look at this here. We had a low, we had a higher high, higher low. This is another higher low, higher low. It also made a higher high, higher high. Look at this here. Lower high, breaking past previous lows. What does that mean? That means now this trend here. And as you know, I've been talking about this being a bit of a rounding top on the Dow Jones. I did a video yesterday, and so I was on the S&P 500, and I actually said it was the Dow Jones. And someone said, "Oh, John, you should be on CNBC." Really? Nah, mate. I think anyway, yeah. So that's right. So this is this drop down here right now, guys. To me, it looks like it's the start of something new. And I'm actually seeing probably a nice drop from here is likely to come, guys. I'll probably see this market come back down to around the 21,000 level now. We're seeing the market failing, right? The market is starting to fail. We're not pushing up higher highs here anymore. And if I bring up my charts and I squeeze up my charts here for a minute, right? Look at this here. Let me bring up what is that? 360. All right, let me just bring up. Look at this here. If I bring up, say, 1 year worth of data. Right, and open this chart up. Look at the volume increase that's happened today. A nice volume increase as we're starting to see what? We're starting to see that rounding top, right? And as you guys know, right, I've been pretty bearish now for the last week, saying, you know what, something's going to happen here soon, and I believe it's more downside. And we're starting right now with an increase in volume. Breaking out of this low point here, guys. And now look at this here, shoulder, head, shoulder. So if we just went on the head and shoulder formation projection, let's do that. Let's do that. All right, I'm going to delete this channel off here. This is a shoulder, head, shoulder projection. So we have more of the neckline coming down through here. We broke the neckline today, as you can see. Let's bring this up here. So the projection for the head and shoulder formation is actually down here. Right, down at 22,000. So that's where the market's likely to run to on a short term. So we're likely to get at least a 22,000. I think we're likely to overshoot and come back down towards these lows through here. But at least on a 22,000 level here, guys. That's where the projection is for the head and shoulder formation. Okay, it's not me making it up. So 22,000. And once again, I believe it's likely to overshoot and probably likely to head back down towards the 21,000 there. So really interesting stuff there, guys. Same for the S&P 500, right? But the S&P 500 is doing what? The S&P 500 is now creating a bit of a double top formation. This actually had a trend line coming up through to here, and then we actually had a resistance here, right? So it's a bit more of a double top formation. So this is the double top here. So how do we measure this? This is the top. This is also, if we have a look here, let me just take this off the screen. Let me zoom right in a bit more. So what we're going to do here is we're going to measure from, we're going to just basically take a trend line. We're going to go from the top of the level there. Let me just create another parallel trend line. We actually have a bit of a double top formation here, as you can see. As you can see here, right, the market is telling us, and this is what's so interesting about reading the charts and reading the markets, right? What is happening right now is that the market is always giving us a sign, right? It's giving us a warning sign that things are slowing. If this was strong, guess what? We continue to make higher highs like we did back here, right? Look at this here. We have a low, higher low, high, higher high, higher low, higher high, higher low, double top, rolling over, right? This here, the market's telling us something has changed right now. So on a double top formation basis, let's just do, actually, you know what? Let's just do this here. Let me just make sure, I'm just going to bring up a straight line like that there. And I'm going to bring up a straight line like that there. We haven't actually broke the double top here, but I believe by looking at this double top formation, the projection for the double top is down here, which right there, right? It's probably a bit lower, right? So it's probably that's actually the projection from there to there, so just below that. But also we have this level of support back here. Not a coincidence that this level of resistance back here, which is likely to be a support, is also the projection for the double top. So at least on a short-term basis, 26,500 would be a target for me of where we're likely to drop, and we're likely to probably continue down from here to complete this double top formation. So that's where I see this thing likely to happen here, guys. Again, we're starting to fail through here, and it's our job to listen to the markets. One of the biggest mistakes I've done in the past, guys, is that I haven't listened to the markets, and so therefore this is the most important things to do, right? The market is telling us right now, right? We're not creating higher highs. We're changing trend now, and at least on a short-term double top formation, we're likely to hit the 2650 level there. And once again, on the Dow Jones, on a short-term basis, that 22,000 is a target for the head and shoulder formation. So once again, if you measure from the head down to that level there, and you project that down, right? If you project that down from where the breakout is, like that, like so, and you bring a bit of a trend line through here. Actually, that's that level. Look at that there, just below that there, right? So, a bit of a shoot down to the downside. We do have this level of resistance through here, right? So it's just above that 22,000 level there, as you can see. So this level through here. So we're probably likely to see a move down to this level through here, guys, around that level there. And maybe the market holds there, but if the market can't hold there, then we're on the way down to 21,000. I still think we're likely to hit the 21,000, but at least on a conservative target, the head and shoulder projection is the 22,000 level on a short-term basis. The Nasdaq, guys, the Nasdaq is absolutely just rocketing into the upside, and it's getting a bit of a pullback here, but we're just making higher highs, higher lows. So I wouldn't want to be. The Nasdaq's not giving us any trend here. You know, maybe we're coming into a new decade where the Nasdaq decouples from the S&P and the Dow Jones. You know, everything's going online, so maybe. And so, guys, that's what I'm seeing there right now with the overall stock market and the overall indices. So let's get it straight into now silver and gold right now. What's happening with silver and gold? So looking at gold here right now, gold has been doing nothing for a long time, right? This here, nice sideways movement, which is absolutely a beautiful thing here. I love when the market does nothing through here because it sets us up to have a very nice move when the market does break out. So the gold is not doing much right now. Really quiet time, a really quiet phase through here. We actually went through a nice bull market, so a run up, bit of a stair step, run up, very quiet phase through here, which is really an absolutely thing that I absolutely love when the market does this. And I'm very excited for this because it could give me a very nice, amazing entry signal and a very nice profitable trade. So I am lurking, waiting, and as they say, preparation meets opportunity. And so I want to look at now the silver market. And silver market is doing the exact same thing as well too, right? Sideways movement, not much going on at all. And as we can see, right, that we have, I believe we're likely to start seeing something like this here. And if we do get something like that, then I see that we're probably likely to race. That'll be a move that I'd see that we're probably likely to see an 1850 level there on the silver market. Once again, you can see here, right, over the last sort of 3 months through here, really not doing much here. We've actually had a lot. Look at that sideways movement through there. So we've had like what, a month and a half now of, or just over a month, should I say, just over a month of not doing much on silver. And when this happens, right, this is the calm before the storm. So right now there's a very calming effect on, this is the gold chart again, very calming effect there, very calming effect there. That tells me the calm before the storm, right? You know, silver and gold, we're going to get some really nice moves coming soon. So be prepared and get ready. If you're not into it, there might be a nice opportunity to get into it. Again, I'm not telling you what to do. You still have to have a good entry signal and based on a good system. So you need to know what you're doing there. So that's what I'm seeing there right now on silver and gold. So let's have a look at the mining index right now. So the mining stocks right now have GDX, nice move to the upside. Very nice move. Like low, higher low, higher low. Very nice move to the upside. But I would really like to see, if I have a look at this, very weekly chart, look how strong this move's been up here. Right, and if you go back to, you know, the silver and gold analogy and stuff like that, where the calm before the storm, right? The market hasn't been doing much. And that's what you want to see. You don't want to be getting in the market after the market's been ripping, right? So as you can see here, the GDX has been ripping quite some time. Big moves to the upside. So don't ever buy the rip, right? What do we want to do? We want to, the trend is your friend, and buy the dip and sell the rip. That means when the market's going up, nice little trend, wait for a dip, buy the dip. You might not get the low, sell the rip, buy the dip, sell the rip type of thing, right? That's the whole thing, right? There's the two things that I can tell you is find a trend where the market's moving in one direction. Once you find a trend, wait for a big dip, buy the dip, sell the rip, right? So the trend is your friend. You're jumping on a trend, but you're also buying a dip and so on and so forth. So that's what's happening right there on the GDX right now, guys. I wouldn't want to be trying to touch that at all. It can keep going up, but for a high probability basis, guys, I wouldn't want to be touching that. Moving on through the GDXJ, really not much going on here at all, right? Very lackluster period through here. But I do believe this lackluster period through here, guys, is we're probably likely to see a bit of a bearish move coming here, right? Like this is the whole, probably a bit of a bearish move coming soon out of the GDXJ, which is, I'm not talking a big crash, but maybe a bit of a short-term pullback. But that would be really good, right? Because then it'll create a bit of a balance in this here. We had a big strong move down, big strong move up. I do believe we actually had this low through here is the final low from many years to come, I do believe. So a short-term pullback is probably likely to be good. And then we have a very nice move up. Once we start to break the 50 level, I have at least a $100 target through there of where I believe we're likely to ultimately get to. And again, that may take 12 months, that may take 6 months, and all that sort of stuff. Quick look at SIL, same sort of thing as the GDX, right? Big move up, really not much going on here. I'd like to see exactly what's happening this week here, right? See how this week here is having a bit of a pullback. If I go to this weekly chart once again, notice how this weekly chart here is definitely sort of pausing through here. You want to see that, right? You want to see the best thing for the SIL right now is that it does nothing for a month or two, right? Give it a bit of a rest. That way it refuels to go for another big move to the upside, right? So that's for me personally. If I was looking to get into SIL, I'm not in SIL, but if I was looking to get into that, I'd want to see a very nice sideways period for at least a month right now, for it to calm down, cool down, and refuel to go for another move. And the SILJ, same sort of thing as well too, but we're nowhere near the highs up here. We're at this level of resistance through here, having a bit of a short-term pullback where we are right now. But once again, guys, I wouldn't want to be touching this until we get a very nice sort of quiet period, right? Because remember, guys, trading is all about probability, right? It's never about certainties, and it's never about missing out on opportunities. There's opportunities everywhere right now. Opportunities are absolutely just blowing through the road right now. And if you know what to look for in a good setup, there are opportunities everywhere right now. Okay, even if it's just for a short-term move, right? Like recently, I got out with a trade. It was only for a couple of day trade. Got out with almost a 20% profit. There's a lot of good trades out there, guys. You just got to know what to look for and how to manage those as well too. So that's what I'm seeing there right now on the SIL, the GDX, and also the mining stocks there, guys. So one thing I want to talk about with now, guys, I want to talk about two different stocks I'm actually really liking that's actually setting up quite nicely. And the first one is Amazon. And let me show you the reasons why. If I look at Amazon through here, let me bring up the last 3 months. Okay, so if I look at Amazon through here, look what's happened with Amazon here. Okay, firstly, what are we getting through here? If we actually have if we have a look at Amazon, right, we had a very nice move up. Look at all this sideways phase. Look at this here. Isn't that just gorgeous, right? People probably thinking, what the hell do you mean gorgeous? Right? It says, and what I mean by that is that's always the best opportunities, right? The best opportunities is that when the market goes quiet through here, and then we get a very nice strong breakaway bar, that's going to give us a very high probability we're likely to start to see a move to the upside. Okay? And so right now, the Amazon is absolutely doing nothing now. It has been doing really nothing now for almost a month. Right? Yeah, 19 bars, 27 days, almost a month, which is fantastic. Why? Because it's resting. This is a good thing. This is an absolutely good thing. Why? Because when we get a calming effect and if we get a very strong breakaway bar, then we could actually see this could be the flattening before a very nice move to the upside towards, I actually have a target of here of 2,900 ultimately. So around the $3,000 level there. So this calming effect, if we get a strong like bull, right? Strong like bull move, that could be a very nice, strong like bull move, that could be a very nice trade for me. I don't know, guys. I have to check all my rules because I go with my rules. But if we get that, that might be a sign for me to get into it. And if it is, then I see this thing rallying, having a very nice move once again. Something like this here. Nice move, sideways. Probably likely to see a nice move, at least back up to the 2,900 level. It's really weird, right? Amazon looks like it could be setting up for another nice move to the upside where we're getting a lot of weakness in the indices. That's the reason why, guys, if you ever trade in stocks, don't look at a stock and say, well, the US indices are looking weak, so I'm not going to trade this stock. Big mistake. So that's one stock, guys, I'm really liking. And also, the next off the rank is Netflix, right? Netflix. What's happened with Netflix? Exactly the same sort of thing with Amazon, right? Nice little sideways movement. We've had a bit of a V top through here. This is not as of a higher probability because we've had a move down and a move up, right? So we're not really getting a good sideways phase through here. So notice how if I look at this here, right, we've had it's more like a V shape. If I look at that there, so it's not as of high probability, but I still actually have, where's my target on Netflix, right? I actually have a $560 target on Netflix. So I believe this breakout here, this big, if I look at this weekly chart here, this weekly chart that we're seeing right now, look at this here. We had a very big, strong triangle pattern through here. Very big, strong triangle pattern. And we just broke out and now we're coming down and holding it through here. This tells me, guys, we have this whole big, massive triangle pattern and a big breakout through here. Guess what that tells me? That tells me we're now getting ready for a very big, strong move coming in Netflix. And I have a target around that 550, 560 level there. And all I did, guys, to actually get that projection, if you want to know that there, is that I just measure from the high, all right, the absolute high point, of, see where this resistance level starts back here. Let me zoom this in here. See how this resistance level, this triangle pattern right now, see this is the starting point, and this is the whole triangle pattern through here. So we're going to go to the absolute first starting point where the resistance is of the triangle pattern, this ascending triangle pattern, and we're going to find the low of the trend line. So if we have a resistance coming through here, and we can see there's actually a lot of support coming through here, wherever the first point of resistance, if the market does this sort of thing, all right, if the market does this, runs up, hits the low, comes back down, hits the low, right, you'll measure it from that point through there, and you'll measure it down through that point through there. And that's all I've done through there, right? You can see here I've got this very big strong triangle pattern through here. So I've just measured from the absolute high point. If you want to be conservative, you use the second point, which is this point here. But that point through there, and if I project that up from there, once we break this level here, then we're likely to run to the 560 level. So Amazon or Netflix, there we have at that level through there. So if I bring my daily charts back up, that's where ultimately I'll see Netflix going. So Netflix is on absolute fire right now. So we're seeing that through there, guys. But once again, if I'm comparing Netflix to Amazon, right? Amazon has had a lot more of a we had sideways drop down and a slight move up. So Amazon there, but either other, guys, I'm very, very bullish on both of these stocks here. Why? Not because of fundamentals. I don't know the fundamentals. I'm pretty sure they're doing well. Otherwise, they wouldn't be going up. And the charts don't lie. So that's what I'm seeing through there, guys, when it comes to the two stocks. These stocks look amazing for more upside to come. But for me, for trading these markets, I still need to wait for my entry signal there. Alrighty, traders. So let me actually just share something with you that I think is absolutely just incredible here. And the reason why we're probably we're going to go through a change, right? This is the death. This is the complete death of the US dollar through here, I believe. And this decade is going to bring something new into the markets. It's not going to be the same. It's going to be something new. What we're seeing here right now, guys, here is the Fed funds rate, obviously for US here. And I want to share something with you here. Right? This is going right back here through to the 1954, right? So 1954, and you can see where we are. We're back to 1954, and you can see what's actually happened over time. Now, the over time, right? This is the reason why this is something really, 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 it's a telling story of what's going on right now and what's coming next. See, the death of the dollar and and something new is coming. And the reason why I say that is because look at this here, right? Every time we actually got to a point of 20% interest rates, man, imagine that, 20% interest rates. I think my father here in Australia, I think they got up to about 14, 15%. And when I was a kid, he actually lost all these, he actually lost his property with that there. So the markets actually ran up here, right? So the massive spike in interest rates through here. But look at this here, right? We had a drop down, and then we had this high. And then we went through a bit of a crash, okay, a bit of a recession, and then when they raised the interest rates, guess what? The markets could only go to this point here and created a lower high, so they actually couldn't raise them back up towards where this point here, right? That's where basically where they raised it enough to where they pricked the next bubble in the next recession, right? If you look at Ray Dalio stuff, this is the short-term debt cycle. Every, say, 7 to 10 years, we have a recession. Does that make sense? So the market rises up, and it gets to a point where then it starts to prick the bubble and it becomes too much debt because they print money, and then they go through another recession. The market drops down, okay? And then as you can see, we went through a recession here in 1990. Okay, the market drops down, market starts to find a bottom, and we start to go through here sideways, and we poke back up through there into the 2000s. This is the maximum point that could go to. But notice how the market is every time we go through a recession and then an expansion, we can't actually get the interest rates back up to the recent high points because we've got too much money, right? So if you'll be looking at, say, a debt here, if you're looking at the debt, just say, for example, this line here was the debt. Well, this point through here, actually, let's do a different color so you guys can see that through there. Right? So let's just say, for example, this here was the debt at this point through here. Okay. Let's say this, yeah, let's say this point here was the actual debt here. So because the debt was there, that's the maximum they could raise it before it starts to get too much for them. Okay, and then it starts to get very, very wobbly. Then the market drops, and then this point through here, the debt actually goes up a lot more. So now the debt goes up to here. So because there's more debt, they only can raise the interest rate so much before they get what? Another bubble. And then more debt is accumulated through here. And then to say, for example, this is the debt now. Makes sense? And then that's the maximum point through there. That's the reason why every time we go through an expansion, we can't actually raise the interest rates up to the prior time we actually had an expansion. And as you can see, that we went through an expansion, and then 2008 happened. They raised it. They almost got it back to this 0.6 through here. And guess what? Boom, down to zero. This time we only got just above 2% before we pricked the bubble, and then down here. Notice something through here, guys. Downward trajectory. Now we're back at zero again. I think it was the as you can see, right, slowly falling off a cliff. And now we're back down to zero again. So I don't know how long this is going to take, but there's going to come a time where this thing just gets, and with all the printing right now, something's going to happen. There's going to be a major default on the US debt. Something's going to happen here, guys, and this is this new era here. This is the end of the fiat money system, the paper money system. That's the reason why you're seeing a lot of push now for digital currencies. You're seeing a lot of push now for just using card instead of cash, which most people don't use cash these days anyway. It's mostly card, and so this is the reason why, guys. This is the start of something new. And this is this is the death of the US dollar, and what this tells me, guys, is moving forward this year is the United States may be a very strong power within the force there, but something else is going to take its place. China right now seems to be the rising power right now, as Ray Dalio talks in his books. And then even if you didn't look at Ray Dalio's books, you can see what's happening right now, right? China and America are going head to head right now, really, 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 really big right now. They're just going head to toe, right? So China right now is the rising power. I don't know. Maybe there's something that maybe we go to a Chinese currency. Maybe we start using their currency for the world currency. I don't know. But anyway, guys, this is the reason why that this, the death of the dollar, and something new is coming. And so, and that's the reason why I said that. Anyway, guys, leave a comment below and let me know what you think about this here, and about what's going on through here, guys, because this is actually going to be something that, it's going to be a complete change time when it comes to the US dollar there. So, the US dollar. And again, the big picture here, guys, maybe that leads to inflation, massive inflation, with the whole printing of money and stuff like that. That's obviously a very, very, very possible thing. We haven't seen inflation for a long time. I just hope we don't keep printing too much money, because then it's going to create a massive inflation, which actually already started inflation, right? Like, look at food prices. I was talking to my mum just recently, and she's like, some of the food prices are doubled to what they normally were in the shelves. And she was like, I went and saw my mum recently, and she goes, Dal, that's what she says. She calls me Dal. Dal, when I went to buy my yogurt, it was like $2 normally, or $2.70, whatever. Say $2. And then she goes, and that's how it's normally priced, at $2. But then when I went and got this recently, it was like $4 something. I said, Mum, so it's basically double the price. She goes, yeah. That's crazy, right? So we're already starting to see inflation in the food sector there as well too. So I know, guys, something's really interesting, but this is the death of the dollar, and something new is about to happen here. So that's what I'm seeing through there. Now what I want to share with you guys is I want to share with you the actual oil right now. Let me go. It's actually oil. All right, so looking at oil right here, right now, guys, we're seeing a bit of a basing out here button. We're seeing there's oil has actually had a bit of a flush down through here. Not really much going on. No, not a lot of stuff going on. Not big flush down. found a major support level through here. And now we've actually bounced back up, and now we're actually just going sideways through here. So I would say that if we can get back above this 30 level, then we have a gap through here. And then that gap, once we get it back above 30 level, we're probably likely to see this gap here being filled here. I would say that this is probably this level through here. And isn't it interesting, guys? It's always interesting in the markets, isn't it? Like this point through here is when we had that oil catastrophe, right? Negative oil, or negative 30 on futures market, blah blah blah, right? Interesting, right? That was the bottom of the market before it started rising. Same for Anyway, so we can see here that I believe this is a bit of a bottom in oil, and I believe we're likely to start to break up and now, and at least come back up and fill this gap up through here, and not only fill that gap, but if I bring up this actually line through here was actually a projection, so that this pattern said that we're probably likely to get down to $10 there. But we do have a major area of resistance around that. Yeah, so that $45 level there, guys. So if we can break this 30 level here, we do have a bit of a gap here on the futures. But if we break up, then we're probably likely to see a move back up to $45. So there we go, guys. That's what I see here. I hope you enjoyed today's video, and I will speak to you guys real soon. Traders, I am running a free training, and on this free training, I'm going to walk you through my #1 trading system for the last 15 years. If you're wondering, what is my trading system? How do I actually trade the markets? What sort of setups do I look for? Then this is for you. See, on this, I'm going to walk you through all the details, but I'm going to walk you through the 3 secrets. The secret #1 is I'm going to walk you through the one thing that took me from $250,000 in debt and almost went bankrupt to actually shifting to actually making money from the markets. I'm going to talk about that one thing. Secret #2, I'm going to walk you through all the steps and all the details to my trading system. I'm not going to hold anything back. You're going to learn all the details to this, so you too, when you leave, you'll be able to see exactly how I trade the markets and what sort of setups I look for, so you can start to apply it today as well too. And secret #3, I'm going to show you exactly how and how I trade the markets for only 1 hour per day as well too. So I'm going to walk you through everything through. So if you're struggling with the trading right now, you need to see this. If you're looking for a really high probability trading system that gets like over 90% success rate, then this is for you as well too. And if you're looking for a way to be able to have freedom in your life, but also condense that down with a really good trading system, then secret #3, you're going to love that as well too. So I'm running that free training today. So go to johnsfreetraining.com right now, and I'll see you there.